Hey, it's downtown Josh Brown. I'm here at the New York Stock Exchange with my buddy, Scott Redler. You may know him as the Red Dog. What's up, Scott?
How's it going?
So, Scott has a new book out, and my favorite thing about the book is it's free. My second favorite thing about the book is Scott has been trading since 1998, veteran, more short-term oriented than I am, but I have always felt that there's a lot both camps could learn from each other. So that's what we're trying to do right now. First of all, what is the book about and why now?
It's an electronic book on moving averages. A lot of people out there, they fight the trend, they short strong stocks, they don't know how to hold things for.
I used to do that.
Everybody used to do that.
Yeah.
And we all evolve. So basically, I always talk about the 8 and 21-day moving average. Everyone's like, why do you talk about that? I'm like, that's
the
because...
The 8-day moving average and the 21-day moving average.
Yeah, so one is a little bit more sloped, which means you're a lot more active. One is a little less, means you give things a bit more room. But both of them together, I consider them the momentum trend.
Are you looking for crossovers?
Sometimes crossovers, or I just want to see it follow it. I want to see it stay above it. I want to see it trend. See,
Okay.
as a professional trader, we like to be in strong stocks, strong trends, and ride the market when it's healthy. And when you're above the 8 and 21-day on the S&P cash or in the Qs or tech or the small caps, that's a healthy market, so we try and ride that.
Okay, so the market went up 30% last year, started this year off pretty good. We seem to be making a record high every other day. Is that work really well for your strategy or not necessarily?
It works fantastic because then it gives you a way to comfortably stick with the trend. Since October 11th, we've been above the 8 and 21-day. So what is it, November, December, January?
The S&P has been above both the 8 and the 21.
For the last
3 months?
About it. For 4 days, it was below.
Right.
4 days. You could even got out there, which I did. I went from like 15 positions to 5, and within 4 sessions, it was back above the 8 and 21-day and broke above 3150, and now we're like, what, 3,300 on the S&P?
So is that how you trade tactically? If the broader market breaks a trend, then you'll say, I'm too long, I own
Yes.
too many things?
I can say I'll manage my position. So basically, in order to get to the 200-day moving average, which is like the institutional trend where longer-term money goes to work, what do you have to do first? You have to break the 8 and 21-day. So as an active trader,
Way before.
And since
Right.
I'm at my desk with 6 screens, I'm on top of it, I could say, hey, I'm getting out here, the momentum's changing, and I could always revisit at the 50-day, the 100-day, and possibly the 200-day when more institutional type money comes to work.
So we have a tactical model in-house, and we're looking at moving averages, but we're like way longer term because we're tax sensitive and it's wealth management. It's not trading.
Yes.
So, but the same principle applies when you're breaking moving average. I think it's a function of the lens. How
Yes.
far back are you pulling it? So you're more short-term oriented than I am, but that's what you do.
But what I do say to guys longer term, I say, hey, if you're going to put flows in every month, which a lot of people do, that's the best way to save for the long term, whether it's college, whether it's retirement. Whenever you see the 200-day, which means we've probably had about a 7% correction, then maybe you double and triple up that month, and that's how you outpace or create alpha versus the S&P longer term.
Oh, so use the breakdown to buy even more, whereas a trader might use that to say, okay, I want to lighten up.
Well, if you lightened up at the 8 and 21-day, you could test the 200-day,
Got it.
which is usually a stronger, longer-term trend.
Okay, so tell me about the book. What, like, if people they download it, it's electronic.
Yeah. There's
Okay.
a link. You just click on the link. You put your email in, and boom, you get the electronic book.
So what will people get out of that?
They'll see the biggest, best names out there and how they followed the 8 and 21-day moving average the past 3 months and how you could have stayed with it. You could use chart patterns in a tier system to add for a cash flow to book some profits, stay with it. And you see how people are like, how could you do this? It's scary. No, it's not scary. If you have a process and you use your trend lines.
What's scary, like being a professional trader and just living by what the market gives you every day?
Yeah, well, you know what? It's scary to be a surgeon if you don't know what you're doing. It's scary to be a police officer. You just
Fair.
have to know what you're doing. You have to have a process and follow it.
Do you agree that you also have to have a certain temperament to do this professionally? And a lot of people that attempt it, they don't find out till later that they don't have that temperament?
Well, a lot of people think that you need to be a gambler to be a trader, and it's the furthest thing from that. I need to be prepared. I need to be on my desk at 6:30 in the morning.
You'll die if you're a gambler as a trader.
Oh, yeah.
For the most part.
You put hope and you're looking for the big win where really trading is a blue-collar job. I don't want to say it like that, but it's every day. It's a grind, and you have to be prepared with a process. Otherwise, if you're looking for the quick fix and you're looking for the home run, you're going to strike out many times versus being like Jeter, who just got in the Hall of Fame,
Right.
who his on-base percentage was fantastic.
Right. So I think like people that don't know trading, they see it from the outside. Their exposure to it is like Hollywood movies or like a book like The Greatest Trade Ever. And
Yes.
so their assumption is like people that work down here are trying to hit a grand slam every day.
No, it's not
But
that sexy.
you'll be done.
Yeah, it's a long. I've been doing this since 1998. I've seen 2 or 3 different crashes. I've seen many bull markets, and my process using the 8 and 21 day has kept me long, or it's kept me tactical and out of the way, and say, hey, this is an unhealthy market. Back in 2008, I think I had my best year because we were below the 200 day, and there was volatility, and we were just in and out, and we didn't hold our breath and go underwater because we were in a bad market.
So your trades become shorter term when the market's in a downtrend.
Yes.
Your longs are
Less.
they're rentals, and you're doing less of that.
Rentals.
Okay. Do you do anything outside of stocks? Do the same principles apply to futures or?
Yeah, I think you could use technicals for futures, for
But
cryptocurrency.
you're a stock guy.
Yeah, like a lot of people are like, hey, Red Dog, why don't you trade futures? I'm like, you know what, because I'm up before 45, then I'll be up all night, and I'll be a fragment of myself with no sleep, and, I say,
Yeah, why don't you have trades on at 1 a.m.? What's wrong with you?
I know, I should be up checking it, and then get up 3 hours later, and then be clear-minded.
Where'd you get the name Red Dog from? I know you for 10 years. People have been calling you that the whole time. So how old is it?
It's old. From college, I used to bartend, so I paid my way through school by bartending and actually emceeing bar mitzvahs on the microphone.
All right, so what else do you want to tell me?
I just want to say that you can be a proprietary trader and you can make a living doing it. It just takes a lot of time. I evolve every day. I'm still growing. I actually, not to toot my own horn, I had my best quarter last year for the first time in a while, and it's frustrating, in any career if you're not fulfilling your potential. And the only way to fulfill your potential is to work hard at it and keep evolving, and stop doing things that put you in harm's way.
Right.
I do say keep a journal. Talk to yourself, create that little inner voice. So this way, when you're doing something wrong or you break a rule, it tells you, hey, Red Dog, you shouldn't be doing that again.
Your inner voice calls you Red Dog too?
It depends.
Red
Depends
Dog.
the time of day.
All right, listen, I love you. Tell us what the name of the book is called.
Hey, Mike, what's my book called?
Ultimate Guide to Moving Averages.
And it's the Cliff Note
Great name.
version. It's not a thick book like people put out there. It's a quick read. In high school or college when you didn't really want to do your homework and you wanted it done for you. That's what I did with the Ultimate Guide to Moving Averages. I did it for you.
Are you going to do an audio version?
It's a good idea.
Just read it.
Yeah, that's what I'll do. There you
All
go.
right. You're the
Okay.
man. Good
Thanks
to see you.
Yeah, great to see
Trade
you.
him well.
You
All
too.
right, this has been Scott Redler. I'm downtown Josh Brown. Let us know what your thoughts are. Let us know what your trading strategy is. If you're a trader, we'd love to hear about it. Make sure you go ahead and check out Scott's book. It's not going to cost you very much, and it might turn you on to some new strategies that you haven't thought about. And we'll be back with you soon.